In this video, traders, we're going to talk about the best times to trade Forex. Stay tuned. Hey traders, a very warm welcome to you. Okay, so we've got this market, this Forex market. We've got multiple pairs and they trade all the way around the clock, Monday to Friday. When are the best times to trade it? We could choose any time. Do we sit there all the time? What do we do? How do we do it? What's the best time? So these are kind of a guide to when the market is potentially at its most fruitful. Let's have a look. So first of all, number one, and also comments in the comment section below, guys, if you're really into Forex and you've got some other suggestions of how to add this, I'll do another video, quite happily do another video. If you've got a kind of sweet spot that you like to get involved with a particular currency pair or market. Okay, so the first one is data. So what I mean by data is we've got traditional data that comes out kind of weekly, monthly, whatever it may be, and we can go to our economic calendar, to that US economic calendar, stick it into Google, or InterTrader's got its own calendar that shows you what's going on the coming week, what's coming up, week ahead I think it's called, and see if there's any specific news coming out or data coming out from that country. That could be interest rates, that could be CPI, PPI, non-farm payrolls, it could be, you know, some comment by an interview or press interview with the governor, whatever it may be, right? Something that potentially could change people's perception of the valuation of that currency. So if you're trading dollar, you're going to be looking at your dollar pairs like USD, JPY, GBP, USD, all those kind of major pairs, and then say, okay, well, something is coming out of America, they've got interest rate announcement, or they've got this, or they've got that. Let me look at the currency pair during that. Now, be cautious about the volatility swings that can occur during data. So I wouldn't ever recommend, under certain circumstances possibly, but being cautious is probably the best way of putting it, of trading over data, because you can get these wild swings. But what they can do is they can produce trends and big moves afterwards, especially if the data is surprising. Let's say they do a surprise interest rate announcement, or some factory orders are less than expected, or something is just unusual, again, meaning that the majority of people looking at that are revaluing or perception of revaluation of that currency. Then you can get trends, you can get moves, you can get opportunities. So it's always worth kind of setting your alarm, scanning for the week ahead, setting your alarm, or however you keep track of this, to look after data just to see if anything's happened. Now, most times it's going to flick around and do nothing, and there might not be an opportunity, but the odd time there will, it might give you an opportunity to get onto a trend, to get onto a good move, to spot an opportunity that fits in with your trading plan and strategy. It's all you need, isn't it? A couple of those and you're good. All right, so that's data, guys. Anything data news that basically is going to potentially move that currency, or raise that country, should I say. Number two, stock market open close. This is a good time to kind of trade your Forex, is to look when the actual stock market, underlying stock market of that country is opening. So if you're trading the dollar, you want to look at the US Open, which is 2:30 UK time, and it closes at 9 o'clock UK time, obviously depending on the time zone you're in. So you'll often get little movements based on how people are positioning and moving kind of money around, whether they're moving money into, you know, dollar and this and that and the other. So you do often get a little bit more activity around that time. Obviously, if you're trading the euro or the pound, you want to trade the open of the Europe session or the UK session. Same if you're trading the yen, the Japanese session, etc. That's the kind of correlation that there is there potentially. Not always, as always with these things, not always the case, but you know, if the market suddenly opens up and goes ripping off the upside, dollar may well do something as well, or yen, or whatever market you're trading. Okay, the open of a country. I could have put this in a better way, to be honest with you, but open inverted commas of a country. What I mean by that is when they start to wake up. So you know that the currencies trade around the continents, you know, from America, Asia, Europe, back round. You know, this is kind of, they follow the sun round. And so the volume tends to be greater with that specific country. So, you know, if you've got yen when Japan's open, or awake is probably a better word, then there's a bit more volume flowing into that, and then as they go to sleep, become euro, etc. It swings around. And that's not necessarily the case for a lot of the major pairs, because, you know, people in Europe are still trading US dollar JPY, even though it's a non-European currency. But often you can see moves as, you know, national companies or whatever are trading just based on their trading day, and maybe they're just accelerating their execution process at the beginning of the day when they wake up at 7 a.m, 6 a.m, 8 a.m, whatever it may be, and at the close of the day. So there's no real define, even though we've got some definition out there. It's really just saying, okay, and it does really coincide a little bit with the stock market open and close. As money starts to wake up in that continent, are we going to get a push? So, pounds very quiet overnight in the UK time, sort of 6 o'clock, 7 o'clock, 8 o'clock, starts to wake up, starts to get some moves, potentially time for you to focus, obviously if it fits in with your lifestyle, and do it then. Number 4 we've got is after big moves. So, these are kind of time-based ones that you can easily plan for. And these are ones that you can't plan for, but you can still kind of be prepared for. So after big moves, so if you had a really big move on something the prior day, let's say you're not trading every day, but you can scan every evening, just filter out stuff that has had big moves, because the chances of it having more good moves and more volatility. And by the way, I'm saying best here as, for me, it would be best, and for most traders, best is when it's moving, there's action, there's opportunity to take chunks out of the market. Okay, there are some traders who trade very, very narrow ranges, but I'm going to assume that we want volatility and action when we want the most sort of juice in the market. So after big moves happen, we may have missed it, fine, but the chance of something happening the next day as well are still quite high. Not necessarily a continuation, but might be looking for a fade back to the mean, a reversal, whatever it is. That's obviously a systematic thing you've got to do for your trading. So filtering out things after big moves, and a good time is just to allocate some time in the day. A good way of doing this, should I say, is allocate some time in the day, just to go in and say, okay, at this time I'm just going to flick through all my currency pairs I'm looking at and see if we've got any decent moves. Or if you want to go one step further, add kind of ATR alerts or range alerts on your platform, which is something you can do, or on a sort of third-party alert service. Our final one is after key level breaks. So similar, but this brings in more participants. So you've got big chunky levels on your weeklies, your dailies, or whatever it may be. When they're broken, or you've got a trend line broken, we had that with USD JPY a year ago, major downtrend. When that was broken, that kicked off into a massive move. So being aware of the levels. And if you don't want to do the levels yourself, with Forex guys, you can go on to many of the kind of websites or whatever, and they'll show you the levels that everyone's looking at, and you can put those on yourself. I always recommend doing the levels yourself. It's not a challenging thing to do, but the big levels that everyone's looking at. If can set an alert, if those levels break, maybe then you want to get involved in it. Maybe you want to look because you think more money flow is going to come in, and you want to ride that wave of money flow, make a profitable trade, come out, wait for the next level break, wait for the next level break, fake, whatever it may be. So there's some for you guys. 5, data is always a big one, because that can cause some big trends, especially if it's a kind of big shift in policy or in something that could affect the economy, and that might bring a lot of global macro money in from hedge funds. Number 2, stock market open closes, cycles of the stock markets around the world. Open of a country, very similar really to the stock market, but it's a little bit earlier. People tend to get to the desk a little bit earlier than the stock market open, and so money might start to flow in a few hours before that bell goes on the stock exchange. And then after big moves, of course, if we've got that big move, we've got that money flowing potential there. And then after key level breaks, pretty self-explanatory. All right, guys, there's 5. Any more? As I said, we'd love to hear your comments on the best times to trade Forex that you think. As always, good trading. Keep the risk management. I'll see you in the next one. Goodbye.